Greetings, everybody. Welcome to Liberty Call. Today is Friday, June 30th, 2023. Hope everybody's having a fantastical day out there in the interwebs. It's kind of a partly cloudy day here in Colorado. We had a bunch of rain and hail yesterday. I don't know if anyone was out there watching the Dodgers Rockies game, but it got delayed. They had hail all over the stadium. It was, the dugouts were full of hail. It was pretty crazy stuff. So anyways, if it's your first time watching Liberty Call, I'm glad you're here. Thank you very much. Please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. And we're going to go ahead and jump into what's going on in the markets today. Look, I see a lot of green on the screen. I guess there's a lot of happy investors right now. All right, the Dow Jones finished the week off up 0.84%, 285 points, closed at 34,407. The S&P 500 was up 1.19%, closed at 4448. NASDAQ was up 1.45%, closed at 13,787. The VIX was up 0.37%. It's currently at 1359. Canada was up 1.22%. Brazil was down 0.12%, and Mexico was down 0.16%. Over in Europe, Germany was up 1.26%. The UK was up 0.8%. France was up 1.19%. Netherlands up 0.65%. Spain up 0.87%. Italy up 1.08%. Switzerland up 0.98%. And Portugal up 0.35%. Russian exchanges were split. The MOEX was flat at up 0.03%. The RTSI down 2.37%. And the overnights in Asia, the Nikkei in Japan was down 0.14%. Australia up 0.12%. New Zealand up 0.83%. In China, the Shanghai was up 0.62%. The Shenzhen component up 1.02%. The China A50 up 0.33%. DJ Shanghai up 0.62%. Hang Seng down 0.09%. And the Taiwan weighted down 0.16% for the day. So, like I said, traders today seem to be in a better mood. I'm not sure why. Nothing has really changed in the world, but, people seem to still be happy. All right, let's go ahead and look at the weekly numbers for, let's see here, for the markets. We're starting out with the Dow Jones. It's going to finish the week off up about 1.99%. The S&P 500, it's going to finish off up 2.4%. NASDAQ, it's going to finish the week off up 2.08%. The Dow Utilities, up 0.35%. And the Dow Transports, it's going to finish off the week 5.75% up. So the transports were the head and shoulders leader among everything. So, all right, well, let's go ahead and zoom out and take a look and see what the trend is looking like right now. Going back to the beginning of last year, we can see the downtrend. Here, the Dow broke the downtrend in November, December, but it's just been trading sideways since then. So, again, my expectation with recession and everything else that's on the horizon that we probably are we have a greater likelihood of a down market than an up market over the next 6 months, but we shall see. Same thing here with the S&P 500, broke the downtrend in early January, traded sideways for most of this year so far, did have a bit of an upswing here in recent weeks, and then that fell apart after the Fed came out and said that, we're not raising rates, or we're not lowering rates anytime soon. So sorry, guys, you're going to have to deal with higher interest rates for the foreseeable future. So markets didn't really appreciate that, and it wasn't until today really that the markets have really shown any real bounce back. All right, let's go ahead and get into the economic data for the week. U.S. Initial jobless claims came in at 239,000. Forecast was 266. Last week's number was 265. So dropped down a little bit there. I think some of that I covered in an article yesterday. A lot of that had to do with pulling a lot of the fraud out of the system. That seems to have helped the numbers. Continuing claims came in at 1.742 million. Forecast was 1.765. Last week's number was 1.761, so dropped by about 20,000. Durable goods orders month over month grew at a 1.7% rate. The forecast was a negative 1%, so quite a bit above what the forecast was. Last month's number was a 1.2%. U.S. new home sales came in at 763,000. The forecast was 675. Last month's number was 680. So new home sales have been trending up since, what was that, October of last year. They've been nice little trend other than March where it dipped a little, been just moving up and up and up. New home sales month over month grew at 12.2%. Last month's number grew at 3.5%. Gross domestic product, we got a final number for Q1, came in at 2%. The forecast originally was 1.4, and the Q4 last year was 2.6%. So you can see from the April number, it came in at 1.1. They've revised it up to 1.3 last month, and now 2% for a final number. Personal income grew by 0.4%. Last month's number was a 0.3. And personal spending grew by 0.1%. Forecast was 0.2. And last but not least, Michigan consumer sentiment came in at 64.4%. Forecast was 63.9. And last month's number was a 59.2. So sentiment has grown a little bit in the last 30 days. All right. Well, that was all the news or all the economic data for the week. Let's go ahead and get into the market recap for today. S&P 500 eyes biggest first half gain since 21 as Apple leads the tech meltup. All righty. The S&P 500 experienced a rally on Friday as data showing lower than expected inflation sparked optimism among investors and fueled bullish bets on stocks. The market is on track to deliver its best first half performance since 2021. Wow, a whole 2 years ago. The Federal Reserve's preferred inflation measure, the Personal Consumption Expenditures Price Index, rose by only 0.1% last month, significantly below the expectations of 0.6% and lower than the 0.4% increase seen in the previous month. In the 12 months leading up to May, the PCE rose 3.8%, missing economists' forecasts of 4.6%. Although the slower pace of inflation might not be sufficient to deter the Fed from hiking rates in July, Pantheon Macroeconomics suggests that if next month's inflation data and the monthly jobs report come in weaker, there's a 40% chance that the Fed will not proceed with another rate hike. In that case, they may be done with rate hikes for the time being. Again, don't hold your breath, folks. The market rally was led by strong gains in the technology sector, particularly driven by Apple Inc. The tech giant's market cap exceeded $3 trillion, contributing to the broader market's positive performance. Apple's outlook is optimistic, with expectations of a mini supercycle for iPhone upgrades as the release of the iPhone 15 approaches later this year. Meta Platforms also experienced a boost with a 3% jump following the UK's closure of an investigation into the company's sale of Giphy to Shutterstock. Cryptocurrency-related stocks, including Coinbase, Riot Platforms, and Marathon Digital Holdings, saw mixed performance after initially hitting session lows. This followed the U.S. Securities and Exchange Commission's statement that recent filings for Bitcoin exchange-traded funds were inadequate despite the rally in cryptocurrencies triggered by the filings. Notably, major players like BlackRock, Invesco, and Fidelity have applied for a spot in the Bitcoin ETF market. Meanwhile, Nike faced a setback as its stock slipped over 2% after the company reported its first earnings miss in over 3 years. Higher costs and a stronger dollar negatively impacted Nike's margins. However, some analysts on Wall Street remained bullish on the stock, highlighting Nike's efforts to improve inventory as a positive takeaway. In summary, the S&P 500 rallied as lower than expected inflation data eased concerns about the Federal Reserve's potential rate hikes. Strong gains in the tech sector, led by Apple, contributed to the market's positive performance. Crypto-related stocks showed resilience despite the SEC's comments in Bitcoin ETF filings. Nike faced a decline in its stock price after its earnings miss, but some analysts remain optimistic about the company's inventory improvements. All right, so that's everything that was going on in today's market. And as far as Nike, I'm not really too concerned. I stopped buying their products years ago when they went woke. If you want to buy a good running shoe, I would recommend Brooks. They're made in America. They are made in Seattle, Washington, so there's probably a bunch of blue-haired weirdos who make them. But at least they're made domestically, and they are super comfortable. All right, last up here from the Mises Wire. It's titled "How U.S. States Could Pave the Way for Currency Competition." It's written by Elaine Delamotte. All right, let's get into this. Where'd my notes go? Oops, hang on a second while I get my notes back up here. Sorry, folks. All righty. Sorry again for the boringness while I'm cutting and pasting. All right, here we go. All right, the U.S. dollar has held, whoops, where'd I go? The U.S. dollar has held the position of the world's reserve currency since 1944 when it was pegged to gold, and all other currencies were pegged to the dollar. However, the system began to unravel in the 1970s due to economic challenges faced by the United States. In 1971, President Richard Nixon suspended the convertibility of the dollar into gold, effectively ending the gold standard and making the dollar a fiat currency. And now we can see all the bad problems that have occurred in the last 50 years from that. Despite being a fiat currency, the dollar has maintained its status as the world's reserve currency due to its extensive usage in international trade and financial markets, as well as its association with the world's largest economy. One of the key factors that contributed to the dollar's dominance is the petrodollar system, where oil was priced and traded in dollars following the oil crisis in the 1970s. This created high demand for dollars, solidifying its position. And a big part of that was we protected the Saudis. We provided basically their military for them in exchange for trading oil in dollars, which had worked out well for a number of years, but has not it's not working too well today. However, the privileges that come along with being the world's reserve currency also come with responsibilities. The United States has a moral, sorry about that, a moral and ethical, where was I? Ethical obligation to treat other nations fairly, but it has been criticized for not fulfilling its duty. Utilizing the dollar for political, economic, and military dominance undermines the principles of good faith and fair dealing in international relations. As a result, confidence in the dollar may erode, and global trade and economic stability could be threatened. This has led to the emergence of a global rebellion by nations seeking to abandon the dollar as the reserve currency and may return to a more responsible form of money backed by gold. See, all this money printing and shenanigans that our government has done over the last 4 or 5 decades is going to come back to bite us in the butt. Efforts by state regulators to find solutions have faced strong political opposition. One alternative proposed by Professor William Green is to focus on the negative mandate of the U.S. Constitution, which states that only gold and silver coin should be a tender in payment of debts. This approach, known as the Constitutional Tender Act, suggests introducing bills in every state to allow gold and silver as legal tender. Preparing for a potential collapse of the U.S. dollar, states should be proactive in exploring alternative options. Creating a competitive environment where the dollar competes with sound money backed by gold is seen as the best option. Several U.S. states have already granted legal tender status to foreign currencies, and once a foreign country establishes a secure and legitimate gold-backed monetary system, it could have de facto legal tender status in the states. Local governments should take proactive measures to prepare for this shift, and being an early mover in adopting sound money backed by gold could bring significant advantages. I wholeheartedly agree. All right. Well, that's everything I had for today and for the week. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. Hope you have a wonderful evening, and I'll talk to you next time. Adios.